for Options Insight. I'm Taylor Riggs. Joining me today is Alan Nuckmig with Agora Financial. Alan, great to have you. So funny, we've been just talking a lot about Wednesday and the Fed and what we think they will do. What are the futures markets pricing in, not only for Wednesday, but really 2019 going forward?
Well, what it's telling us that December here is a done deal. There's a 78% chance that's going to happen. But looking out further, what the futures markets do, there are no rate hikes, no chances of more than 50% of rate hikes all the way out into 2024. So the market's taken that worry or that woe pretty much off the table. So I know people have been worried about rates rising in the spring, but recently people have been worried about rates going down in the 10-year note. So you can't have it both ways. I think that's going to be stability, and that's something we need in that rate environment. Well,
speaking of stability, what we're not seeing is that in the equity markets, just on an interest chart, we were looking at the S&P 500 hitting a classic double top. What else is going on in the S&P 500 that has you concerned from a technical levels?
Well, it's really actually a slow grind lower. I know it doesn't feel that way, but you're looking at a 2% move, and typically we've been seeing 1.5%, 2% moves on this downward trend. But in the big picture, the S&P is just trading sideways between 2,800 and 2,600. Today we've dipped down below that again. So it's 2 Mondays in a row that we've made new relative swing lows. Last week we had a big reversal, and that's kind of the sign typically that a bottom is put in. But today voids that, so we'll have to wait. We're not feeling that violent push to the downside just yet. The VIX right now is at 24, 25. Let's remember that's half of what it was in February.
I want to talk about utilities because we were talking about interest rates earlier, and some of these more defensive rate-sensitive stocks are actually selling off a little bit today. Utilities, one of the worst performers. What are you noticing in your market that makes you concerned at all about the utilities sell-off today?
Well, it's not just utilities. All market segments have been on this downward path here recently. Now, utilities had held up relatively well, so maybe you're just seeing some profit-taking unwind in that individual sector. But there's always going to be sectors that offer the opportunity on the upside and the downside. Let's look at the metals and miners. Those are holding up relatively well here today, and we had the dollar make some new relative highs, new 1.5-year highs on Friday.
Alan, what's your big trade for the day? Walk me through it.
Morgan Stanley, looking at a bank that's been broken a bit. Now, this is a stock that rallied from $20 in 2016 to $60 here this year. It's at the halfway point right now at the $40 level. I'm looking at the in-the-money call, the June option, 6 months of time. $35 call is going to cost about $700. It's $500 in the money. Looking for banks to bottom out here. Now, they made new lows, but they did not make new highs in volatility. So that's some bullish divergence. And from a risk-reward standpoint, I think it's a look at for the longer term. In 6 months, a lot of things can happen.
Okay, so not just Morgan Stanley, but all of the financials you like?
Yeah, I think from a risk-reward standpoint, after this sell-off, they offer some decent value here. Let's see if the market can have one thing in 2019. One thing we've been missing is certainty, and a little bit of certainty could go a long ways. That would help out the banks, and I think the interest rate stability is one step in the right direction, and that could be very helpful for everybody and build a little confidence in the markets once again.
A little bit of certainty could go a long way. Thank you. That was Alan Nuckmig over at Agora Financial. Caroline.
A little bit of certainty, that'll be a fun time. Let's keep